think I was literally sitting at the pub. I think it was with my wife at the time, actually. I just thought, shall I do this? And I logged onto my NatWest app and got a loan. Yeah, probably shouldn't have done, but got quite a large loan because I was like, I'm just going to go and do this. And that was it. But I do remember kind of figuring out actually what I wanted to do and figuring out that, we used invoice funding at the recruitment business and how can I do something better? I didn't like it. I thought the process was clunky, it was archaic, it was like an oil tanker, it was meant for bigger businesses, it prejudiced small businesses every step of the way. And recently I've asked people, do you walk up the escalator or do you stand on it as you go up?
Great question.
I always walk up. I've got somewhere to be. Even when I know it's a chair in the office, I don't want to stand on the escalator and go up. At first I told myself, grow up, you're not a finance guy, move on. And after I found out COVID was going to, ravage the business and put us under, it's like, I refuse to give up. We increase the size of that more and more and more and take more of the pie. It's not saying that we're just funding more people now. It's other SMEs that weren't getting funding before now are. And that's where you can start to build growth back into the economy and productivity. That will have a knock-on effect. So I think the times at the moment are very volatile. We're always skeptical as what's going to happen next month.
From Swoop, it's Take the Plunge, the podcast where we hear from founders who stopped what they were doing and took the leap into building their own business. We explore how they made that decision, the first crucial steps they took, and what it really takes to scale. My name's Kieran. I'm going to be your host for this episode. Today, I'm delighted to be joined by Jamie Beaumont, CEO and founder of Playter. In just a few years, Jamie has taken Playter from a solo founder idea to one of the UK's fastest growing fintechs. Along the way, he's raised over 60 million in equity and debt funding, funded over 6,500 businesses, generated nearly $1 billion in funding applications, and scaled Playter to over 4 million in revenue within 18 months. Playter's mission is simple but vital, fixing SME cash flow, the number one killer of small businesses. Through innovative products like Playter Pay and Playter Paid, Jamie and his team are giving founders the breathing space to grow. We'll talk about how he built Playter from scratch, what it takes to lead through rapid scaling, and his views on the future of SME funding. You're very, very welcome, Jamie. How are you doing today?
I'm very well, thanks. Thanks for having me.
Super. Well, if I can take you back to that beginning phase, kind of pre-solo founder, what were you doing and kind of like why did you decide and I want to be a founder?
So I was working actually in recruitment at the time. I'd always done stuff beforehand. So I'd kind of always wanted to do my own thing. So if I found something cool, I'd try go and do it. And initially the idea was I just found a problem with NHR and I wanted to go and fix that. And it got to the point where the urge to solve a problem got too big and I just needed to do it.
You'd never any aspirations to ever work for a company or anything like that?
I did.
Yeah.
I think. I was kind of molded into, you've got to get a job, rightfully so. But, my first ever job was with WPP on their grad scheme. So I went into advertising, didn't like it. I watched a ton of Mad Men, thought it looked cool. Mad Men is a little bit older than, 2012 starting. And so I just didn't like it. I've always prided myself into being the hardest worker. I love a meritocracy, which is why I found myself in sales. But I don't think I ever did or didn't think I was going to work for a business. I just thought I was going to get a job and then just see where it went. And as soon as I found myself working in a company, I realized there were a ton of problems. People weren't happy to fix them. There was a lot of people, steady Eddies, just happy to let things go. I wasn't. And so I found myself saying, well, I reckon I can do this better. I kind of any kind of arrogant founder ego being like, let's do this better myself.
It's calling it out straight from the get-go. My gosh.
And then left and started selling myself. So it was never something I was bred into just saying, let's get a job or I was going to be good or bad at it. I probably not a good employee.
Yeah. Well, was there like a penny dropping moment of being like, God, this is just awful? Or
yeah, I didn't like the lack of implementation and execution and also controlling the narrative in a business. But like, this is what we're going to go and do. And I know there's why don't we go and tackle this?
Yeah.
And the only way, I would constantly, prod and say, I think, can we do this? And can we find a way to do this? And why aren't we growing or whatever that might be? The only way you're going to solve that is by doing it yourself, unless you've got a very kind of creative and flexible team and you're one of the early kind of founding team, let's call it. Then it just doesn't work like that. This business was, fairly old. And so I just thought
the sphere of influence is limited.
The itch got too great. And so I can't remember. I think I was literally sitting at the pub. I think it was with my wife at the time, actually. I just thought, shall I do this? And I logged onto my NatWest app and got a loan.
Oh, nice.
Probably shouldn't have done at the pub. But got quite a large loan because I was like, I'm just going to go and do this. And that was it.
And did you always knew you were going to do recruitment, or was it like, I'm just going to get myself some money and I'm going to put it into something?
Yeah. To be honest, never. I don't think anyone leaves uni and says, oh, I'm going to get into recruitment. It's like you fall into it type of thing. I'd never even heard of it, to be honest, and kind of got sucked into it by me trying to get a job through a recruitment agency. So it was just a meritocracy. It's a way of going in somewhere and saying, if I outwork everybody and I'm better than everybody, I'll make more, but I'll also go up the ranks quicker as well. And that's what I liked about it. There are a ton of things I didn't like about it, and which is the reason I left. But I found myself in a place where, you're with peers, everyone works hard. We used to come in on bank holiday Mondays and the weekend, and it was, everyone was quite young and, had a, fairly big drinking culture. It was just generally quite an exciting and like fun place to be, but the industry wasn't what I wanted. And ultimately I think, the urge got too strong and it's all right, let's go do something myself now.
And how long did you give that kind of recruitment phase before kind of ultimately coming into Playter?
A few years. Some might say I could have left it a bit longer. It was a few years, but Playter morphed out of something else. And so I started as HR tech company. I ended up raising a few £100,000 from angels in July 2019 to build the product. I'd bootstrapped the product build from there and got some outsourcers and all of this stuff that, I'll give you the long list of my regrets, at another time. I needed money to basically finish the platform, get some proper people in to build it. And then I launched it kind of very early on in the year in 2020.
Great timing
for an HR platform. No one was willing to hire anyone who used HR platforms.
How is the investor update?
It was all very personal. My 3 angel investors were legends, still are legends, still speak to them all the time, love them to bits. They're still part of the Playter journey, and they're massive advocates and they've been brilliant. But going up to them and saying, COVID scaled faster than my startup, really, saying the dream is dead. Like, you invested in this dream, the dream is dead.
Yeah.
But I do remember kind of figuring out actually what I wanted to do and figuring out that, we used invoice funding at the recruitment business and how can I do something better? I didn't like it. I thought the process was clunky. It was archaic. It was like an oil tanker. It was meant for bigger businesses. It prejudiced small businesses every step of the way. And at first I told myself, grow up, you're not a finance guy, move on.
Yeah.
And after I found out COVID was going to, ravage the business and put us under, it's like, I refused to give up. Like, what can I do? And I remember just going out to a few people on LinkedIn saying, this is my idea. What do you think? And I must have had a few hundred inbounds from business owners that week alone that made me think this has got some legs. So I went up to those angel investors, said, this dream is dead, but I think there's something here. Can I give it a go? And they backed me. They said,
amazing.
Go ahead.
Amazing. And did you have to kind of go back and raise more, or did you? Okay, you did.
Yeah.
So how was that?
Lenders are not cheap. It's a strange one. As a software business, you can kind of build the software, go and start selling. As a lender, there's lots of different strings that you pull to be able to make sure that you can actually lend money. You never get upfronted all of the money. So you need to have some kind of a pot of cash to put forward to match the funder's money as well. Luckily, my angel investors gave me another pot, which was used to kind of test out can we lend money or not. But I ended up raising about 500 grand at the end of 2020 from another angel who was actually friends with the angels that I brought on. So it was really good kind of networking connections there. And he allowed me to go and build. So that was the first step to say, right, I believe in this. This has got legs. He also owned another lender.
Yeah.
So it was great.
And talk to me about that kind of building. Kind of loosely touched on this. Like, how do you feel about building out software and tech?
Great when it's going well and you find everything clicks. To be honest, things didn't click until 2023.
Yeah.
I used outsourcers for a very long time.
How did you find that?
Not great.
Yeah.
I think if you've not got the foundation or you've not got in-house expertise, and we tried and we had some people and they didn't work out, but we ended up, you haven't got product owners. And instead of, just engineers, you want product engineers who look at the whole ecosystem of your product and think, if we build this, could compromise this part, or what does the flow look like, or what do we want the customers to feel like? Very customer centric building that we do now. Back then it was, these are the features, build these features. And we had data problems, things didn't work, it was a very expensive exercise and lesson learned. And I think outsourcing does work. I know lots of people who outsource and it works fantastically well, but you need to have somebody managing those people. And at the beginning of this, I didn't really make my first hires till the end of 2021, have a finance person at the beginning of 22. So there's a long period of time.
Yeah. How do you, because it's so hard, the spinning plate analogy, but how did you manage to weight your time to all the different aspects that you had to do to kind of get it to go live operational state?
There's a brutal reality, which is compromise large parts of your life.
Yeah. Fair.
I think there's a huge battle for work-life balance. I personally don't like the phrase work-life balance because it always assumes that there's a balance going on at play, which is not true. Sometimes you have weighting on work. Sometimes you can build another weighting on your life, but never really is it truly balanced. To get it up and running, how many hours in the day are there? How many days of the week are there? And how many can I utilize? And that was it. I used to go on holidays and I was writing credit agreements by the pool, sending them out.
Could have done with ChatGPT then.
Could have done with ChatGPT back then,
handy,
agents and all of this, or even understanding them, to be honest. Yeah. So it was really just, listen, what am I prioritizing? What do I need to do? And really figuring out what are the key things that get the ball rolling. The first one was get a loan out the door. Just show that you can prove it. That's the MVP of a lender. Yeah. Rather than build software and say build a minimum viable product and see if it works. It's, can you get a loan out? People repay it and then go from there.
I was two parts of that, but one bit I just gonna have to take in straight away. How nervous / excited were you sending that first loan out?
Yeah, terrified. It's really weird sending money to people. Yeah. It was quite a large business. Yeah. They were kind of Series C, Series D tech business, and I knew them. So I was hoping that I wasn't going to ruin a relationship there at some point. It burned the bridge. But sending money out to someone at the first, and it was effectively my money at the time, was slightly terrifying because it's not really what you're supposed to do. I started a software business. I was supposed to get money coming to me, not sending money back out. And you soon realize that lending's really easy in one way. It's super easy to give money out. Yeah. It's not that easy to get it back. So the risk analysis and mitigation is really key, but sitting there and pressing the button, and I think it was 14,000 or something like that. It wasn't an enormous, when I look back at it now, and we've done over 100 million of lending, we've done over 1 billion of applications. Now it's kind of 14,000 loan.
Yeah, but at the time it must have seemed
huge.
It
was. This is the most obscene thing I've ever done in my life.
And what kind of payment terms were they on back then?
I think they were on 6-month payment terms.
6 months, okay.
So I don't know why I chose that. I don't know why they decided to do it. I can't even remember. I think it was more of a, let's get this going. It'll be fun. I think they were they just hired someone. So it was a recruitment fee they were spreading out. So it felt familiar to me. So let's just do this. Yeah. Managed to convince the CFO to do it. Yeah. I don't know why, because they had a ton of cash. Maybe they were doing me a favor. I'm not sure. Yeah. And just sent the money, got them to sign a direct debit. Yeah. And sat there and just
waited,
hoped you'd get a notification that they paid me back. But they did. Yeah. And it worked.
It's amazing. And talk me a little bit into the kind of the product discovery, because you touched on getting some level of familiarity with kind of invoice finance, but being kind of clunky from that recruitment experience. How did you kind of land on the kind of first Playter products, and kind of how do you kind of evolve it to what it is now?
Playter Pay, which is the bill pay. So you've got bills, you can spread it over time. That was supposed to be an invoice finance killer. And the way I thought of that was, if I'm invoicing someone and I'm owed those funds, but I need to pay somebody to get me paid, that's unfair. So what's the point in that? I've done the job. I'm legally obligated to get those funds. There's a legal obligation on my customer to pay me through contract, hopefully. I just find it weird how I'm paying a bank to partially pay me, and there's recourse on that because somebody else wants to pay me late. It's bad behavior all around. Yeah. So instead of aiming at how do I help people get paid, why don't we help flip the story here and say, well, no one needs to invoice finance if everyone's being paid on time. Yep. How do you help people pay on time? Well, they don't pay on time because of cash flow. And it could be innocent purposes. They just want their end of month accounts to look good. So they push it over to the first day of the month, and that's day 31, whatever it might be. But if you have the ability to pay that invoice, but spread it over a period of time, your cash flow is good. Your customers, your customer supplier who is delighted.
Yeah.
And that was the way I was thinking of it, is how can we actually change the value being attributed in invoice finance and flip it and say, well, they owed their money, so they should be paid, but we should make sure that we're fixing the problem for people paying, not just stick in some money and say, hey, we'll charge you to get paid. So that's how Playter Pay was kind of released. And over time, we've ideated and sometimes ideated and innovated all the way back to Norm, where we released Playter Boost, where people just want loans. And when times are good, they want growth loans because they want to expand. When times are bad, they want loans to help with cash flow and things like that. So, we released that as well. And then we had, these large distribution channels, Playter Pay, Playter Flex. So it was all built around how do we help businesses grow and how do we give them the finances they need, but how do we look at it from a slightly different angle? Every time we went to market, and that was it really.
And I suppose just digging into that kind of going to market, did you find it was easy going to market with that proposition? Did businesses get it straight away? How was that experience of kind of, I've got this great idea, how do I get it into the heads of business owners that can be hard to reach,
Yeah. So our first go-to-market, we tried lots of things. And we now have a very successful go-to-market, but we tried lots of things. So we've tried PPC. PPC is great when you've got options, but if you've just got one product and, one way of underwriting, then you've effectively got this tiny, tiny sliver of the market that can have it. And we got lots of wrong types of business coming in. Then we tried outbound. So we hired a team to basically cold call people. That's weird because someone picks up the phone to a cold call and they're offering them a loan. Just don't think it works that well. And you also catch them at the beginning of their journey or not even on the journey. So you've got to wait for the education piece. Do they need it? And it takes a long time. And then we found brokers. And for us, what we wanted is to be as close to the transaction point as possible. So has someone got do they want a loan? First of all, have they got the intent to do that? Have they educated themselves or been educated by someone? And where do we catch them at the point where they're looking? They really want one now, and we can be part of that panel. And going to brokers for us was a great way of saying, why have we got a sales team when commercial brokers are our external sales team? They're our outsourced sales team effectively. And so we invested heavily into the broker market. And over the last few years, rapidly increased it and built technology and portals and all this kind of stuff to kind of help enable brokers to send us deals. And that is what we've landed on. And that now helps us with product ideation. It helps us with releasing products. We released our Boost product. We didn't find a list called business directors. You give it to brokers who are very familiar with the product and they distribute it. And, all of a sudden we're getting hundreds of millions of applications for that product without having to make a call outside of brokers. So it was a great way of getting experts who understand the market, who have people looking for loans to be able to say, hey, I think you should apply to Playter. And that's kind of where we've fallen. Now we are 99% broker-led.
The PPC can be pretty expensive. Kind of need a bit of a loan to get some of those AdWords probably.
And you'll listen, I mean, the broker market has a very successful PPC background because you're offering numerous different types of funding. So one business can look at lots of different types of funding. And so there are options to monetize that or help that business into, executing, the output and outcome that they want with lenders, unless you're a real multi-product lender with, invoice finance, asset finance, property finance, cash flow loans. You don't have that market to distill down and say, well, we're going to spend 50 grand a month on PPC and then see if we can give them loans. So it is an expensive, we tried it out for a bit and I think it's good to try it out to be able to tick it across in the box. It was very much across in the box for that one.
And I'm kind of curious to talk about the kind of people journey because we've kind of touched on it in terms of some of the different roles you've referenced, whether it's marketing or product, but also the struggle of the founder work-life balance or non-existent of like, will I take some of this 24/7 or will I give it to holiday or will I give it to work? But you've obviously managed to get through that kind of real tough grind at the very beginning to start to build out a team. So how did you start to realize kind of what roles or what people you needed to bring in along the way, or was it a struggle? How did you find it?
I think you basically go straight to the deep end because who do you bring on? There's huge flashing, shiny things where you're like, let's do some marketing and let's do this. But, the the first person I hired was an operations person. Second person was CTO that came on board. But the first real kind of game changer was he was our head of lending at the time, brought on, but our CFO. And, then we had a head of risk that came on board and so on. And I have made lots of mistakes over, the last 5 years or so in terms of who we hire or what we do and what types of people we hire and the types of roles we've hired. Managing people has been really difficult because I think as well, when you're a founder, you are all in, this is my life. And your mentality is, I want everyone else to be all in to this, but they're not the founders. So you need to kind of manage your own expectations as to do we hire the same people? How do you hire those people?
Yeah.
They are a dime a dozen. They're very, very rare to bring somebody on who thinks the same way. My CFO does think the same way. And he's been, fantastic partner along the way. As time went on and I kind of learned from the fact that as a lender, you can't just like explode and have, here's $1 billion of lending because there's a huge amount of risk on those funds. We started to look at what actually moves the needle, what moves the dial, and how can we start to become a profitable business? How can we start driving growth responsibly over that period of time? And so we don't do any marketing. We don't have a marketing person. We don't have ad spend. We don't, between GPT and Canva and me,
wonderful tools.
Yeah, I'm basically the marketing guy, and some of the sales guys give it a go. So we really look at what makes the business tick. It's, we need to have salespeople having relationships with brokers. We need to have people who are able to underwrite. We need to have finance people. We need to have engineers. Outside of that, there's a big question mark as to when you bring somebody on. Well, number one, can technology do that? And number two, do we really need that person in the first place? So I've learned to focus on why are we hiring this person and what value does it have to the outcomes that we want, which is top line revenue, bottom line revenue, profit and lending, and hopefully getting the money back.
Makes sense. But I feel like that's 5 years that's given you that sense of clarity.
5 years, yeah. So, it's look through Charlie HR and all the bit of the business.
the
archive button in Charlie HR and there's a list. I mean,
no, but that's completely normal. That is completely normal. But I suppose it is because like you can speak with such clarity now, and it's amazing. But to get to that level of clarity, everyone has to make mistakes or see stuff that are like, as you said. You think with such naivety at the beginning, everyone's going to have the same drive, same passion. That's just not the case. It isn't. So
it's not the case.
Yeah, like what I suppose I'm curious to dig into. Obviously, the head lending that went so well. Like, what bit about him, her was okay. This is what I want. Like, what bit of that was
he brought on the expertise. So that was number one point.
Yeah,
I'm not.
That is a lovely like. Oh, you actually know what you're talking about here.
Yeah, and he would bring terminology up, and I'm sitting there going, yeah, I know what you mean. Having no clue. So he was a real kind of, experienced guy to bring on board.
Yeah,
which was fantastic. But he also had the same founder mentality. So maybe it's because he used to work for a bank and, they work you pretty hard.
Yeah.
But he has the pride in his work. He wants the business to do well. He had every ingredient really to be the founding member of Playter. And I got lucky with that. I interviewed a lot of people for that. And actually, I remember interviewing him. I had COVID. And then when he started, he had COVID. So he actually started a week late in the office. But he has always along the way been the mold of an early stage person. But that worked. And it kind of, it was great that it did work, but almost bad as well because I didn't learn any lessons.
Yeah.
And so I took that into other roles that I went off and hired. And we've got this long archive list in Charlie HR. And sometimes I got it wrong, where it was the wrong hire in terms of I shouldn't have hired for that role.
Yeah.
Partnerships role, for example. Sometimes
very hard role to hire for it.
Horrendous.
Yeah.
And also, why are we doing it? We were small. What partnerships were we making?
Yeah.
I have a friend that said partnerships are the worst ships that ever sailed. Because, you send me deals, I send you deals, and it's not,
it's never an equal, because not everyone wants the
no,
same.
Exactly. Where it's, we get paid, you get paid. There's a real relationship behind it. That's where it's worked really well. And that's our partnerships you've paid with brokers.
Yeah.
But I made, if I could build a list of, as I said at the beginning, of all the mistakes that I've made, they're very painful mistakes along the way. And some of them were almost terminal mistakes as well along the way. all of those combined mean that, yeah, I can talk in clarity now about what I
Yeah.
would do and how I would do it again and what we do now.
Yeah.
But that certainly wasn't always the case.
And to dig into the old archives for a second, what have you, I suppose, learned on the pain side of things of, oh, I know what to maybe avoid or what doesn't work for us as an organization? Because often it's down to like an organization, the culture and stuff like that. Certain things will gel, certain things won't.
Yeah.
Have you kind of a series of things that you can look back and go, yeah, going to try and avoid those kind of pitfalls?
Yeah. I think, to be honest, going back to the kind of ingredients making the cake and all these things, they didn't really click till around a year ago in terms of what is it necessarily that make people good in this environment. I don't always think it's like in Playter specific. I think it's startup specific. It's those with the mentality. And I think we always put it back to if there's a tweet and a podcast or a really good guy called George Mack who talks about high agency.
Mm-hmm.
Agency is incredibly important. Proactivity, the people who are going to go out of their way to
proactivity is really
push
key.
on, and almost look at the impossible and think, okay, we can try do something here. That's the type of individuals. Like recently I've asked people, do you walk up the escalator or do you stand on it as you go up?
Great question.
And I always walk up. I've got somewhere to be, even when I know it's a chair in the office. I don't want to stand on the escalator and go up. It's people who have the intent and a mission, like they're on the go. They want to prove to go and do something. These are the things that we now know. It's like you need someone with agency. You need someone who wants to push the boundaries. They want to do incredibly well for themselves, and they've got a short shelf life. Startups, generally speaking, what is it, 3-year tenure in kind of average terms? You want to help people learn that you want them to leave much better off than when they joined, and an understanding that you're not going to be here forever. Hopefully, we're all not going to be here forever. You've got objectives for the business, and so a few years of graft, you'll progress 10x quicker than you will do if you went to a bank or a big conglomerate and, had bureaucracy and red tape in your way. But you'll do it, in 3 years, and, there could be a huge outcome at the end of it. Those are the types of things we now look for to find out, does that excite someone? And also say things that are honest. There's a company that really needs a loan dispersed on Sunday morning.
Are
you going to do it? And some people might say, how dare they ask someone to work on a Sunday morning? That's fine. You don't have to join startups or a startup where that's necessary. And it's not always necessary. It's very few and far between that we find these, and it's very, very rare. But on the odd occasion where that is necessary, you want the person to be like, I want to do that. Not I'm being told to. I want to do that. And that's what we've figured out is how do you find that? Now, what are the specific signs? I still don't know. And I think there are a few things along that you do find, but this kind of concept of agency and high agency and, the little questions, do you walk up the escalator or do you stand on the escalator? Are you afraid to overtake someone when you're walking? Do you like being early? Do you like being on time? Do you like being late? All these different types of things about somebody's personality. That's actually the reason why they'll do well in startups. Not because they work hard. If they work hard, they work hard. Not because they're intelligent. Most people, are pretty clever and they'll pick up on things. It's these tiny nuances, put them together, superstar.
Yep.
If they're not there, big mistake.
Yeah. Yeah. Brilliant. Really, really like that escalator question. Want to talk to you about another aspect of being a founder. And I'm curious, because one of the most stressful things when we chat to people here is raising and constantly fundraising, because it's such a vortex of time. But for you, is that kind of like double because you're essentially raising seed capital or equity for the business, but then you're also thinking about debt funding lines? Or is it just one big thing you're constantly talking about? Like, how do you think about that?
No, I chose the hard route.
Yeah, beautiful, like pretty challenging.
You've got to do both. And generally speaking, you've got to do, if you're looking for debt funding, you have to have enough equity or you need to go fundraising. And the equity guys are going to want to know that you've got the debt, and the debt guys are going to want to know that you've got the equity. And so it turns into this
lovely chicken egg
22 and chicken and egg. And no, it's very difficult. And I think that the role of a lender is to understand your scale and understand what capital you're going to need to be able to scale. And when you get to kind of terminal velocity and you've got the scale, you can then refinance, you can fill up the junior note and start to get a mezz in place, and you can raise different types of funding for debt and equity along the lines. But it's really just understanding where your scale is. When we raised in 2022, it's a very different market to when, people are going raising these days. We're now a profitable business. We're very proud of that because, 18 months ago,
congrats. It's
we
amazing.
used to be, burning quite a lot of money.
Yeah.
Um,
Stressy position to
and
be in.
it's stressful because what you want to do is you want to focus on the business. You
Yeah.
do not want to be focused on raising. All of these, TechCrunch, big fundraise and stuff like that. It is all great, and congratulations to everyone who does it. I've been in that position. It feels great to get it over the line, but it is just resource for you to go and hit your targets. And the amount of, if you wanted to do a huge list of 10,000 businesses that have raised and see where they are now, the large majority will be dead.
Yeah.
So the raise isn't the good thing. That's resource to get you to where you need to be. And so for us, it's just this balance of where are we at with our debt finance? Where are we at with our scale? What do we need to do on the equity side if we need to do anything at all? We haven't raised in a while, and we're proud of that as well, actually. Reverting away
Well,
from
nice to keep more of the percentage in the business.
more of a business. And I think everyone forgets that when they say,
because you're just giving stuff away.
Sold some of your business. That's it. So it is really difficult to balance that debt raiser, and they're very different mentalities as well. So the debt funders don't want to hear, we're going to go gung ho. We're going mad.
Yeah.
They want to hear restraint. They want to see risk mitigation, how you analyze risk, that all these things. If you said it to equity investors, they're like, well, you have no ambition. So how do you match those two people at the same time? If you're going to have 4 meetings in a row, one on, one off, debt equity, you have to change the mask you're wearing, basically, or the hat you put on to
prudence and then growth.
Yeah, at the same time. So it has been difficult. I think internally it's difficult to sell as well the type of startup that you are. You're not an AI startup that's going to do 0 to 100 million in 1 year. You could actually, out of any other industry, lending, you could make as much revenue as you want. Really, we've had 1 billion of applications. We could have funded every single one. We wouldn't be here. The business would have gone under. And that's the difference is with a software business, when someone buys your product, sod it, great, come on in, give me money, that's great. With a lender, you have to be very picky who you're giving money to make sure that you get it back and allow for that growth. So that's how the two go hand in hand. And it's very difficult to manage that.
So now that you're in that profitable state, congratulations, amazing achievement. Do you now kind of gravitate more to the debt funders and their kind of thinking of probably more conservatism, growing as a business would grow, as opposed to say the equity, which is like keep growing, but forcing you to kind of put a bit more aggressive hand on the lever, or do you still kind of go between the two?
There's a reason why you have a dynamic of founder and CFOs. They're supposed to be your anchor in a good way.
Yes.
I want to build the biggest thing that can be built. That will never change. Sometimes I have ideas and they're ridiculous ideas. Sometimes I've had ideas and they're quite good ideas. I'm sure my CFO will say that, there's more ridiculous than good.
You only need a few good.
You only need one.
Yeah.
And so for me, I want to grow. Listen, founders want to grow something big. I think when someone is hamstringing you and slowing you down, I've had to get used to that because of the lending markets. The VC, 2020 happened, that Russia invaded Ukraine, interest rates spiked, inflation went up, new government comes in eventually, tariffs go. There's all these things affect small businesses, but really affect lenders. So we have to sit there and understand, okay, I know I want to go mad, but I can't. And so what's the difference? So I don't want to go to the point where if you go to a lawyer and get advice, they'll do belts and braces. If you were to listen to a lawyer, you wouldn't do anything realistic. You'd stay in your bedroom and you'd be like, I'm just scared of the world.
Yeah.
So you can't go to the debt funded side of being like so risk mitigant on everything that you end up not doing anything, but you can't go nuts. So you need to find this balance. And I've learned that balance over the last 3 years, how, what we should be doing and how we should be doing it. But the mentality will never go away that I want to grow really quickly. And I want to build great go-to-markets. I want to build great software and a platform that enables people to do things and build innovative things as well. Don't just be a lender that lends money. How can you add value back to the industry? So all of these things mean that I can keep the creative juices flowing without being a nutter in lending, basically.
And I was finally just curious to touch on kind of the macro environment, because you've touched on some pretty mega things that have happened in the world over the last couple of years. So how do you feel about SME lending generally within the UK, within the alternative finance versus banking? Just curious to get your thoughts on that.
Listen, I think it's one of the biggest markets in the UK. It's something like I said, there's always a need for funding. The purpose of funding might be different, but there's always a need for it, whether it's growth or whether it's cash flow or whatever that might be. The banks retracted a long time ago from SME lending, and that left this kind of cavernous hole of who fills that. Alternative funders started to move into that, but you look at the people like Funding Circle, the first alternative funders, let's call them, have morphed into looking like what the funders looked like before as the banks. So there is a huge gap that needs to be filled. I think everyone always talks about this £20 billion different black hole of SME funding.
Yeah.
But I don't see anyone doing anything innovative to try and change that and the way you assess businesses. And the open banking has helped, technology, API connections, and all this has helped. I think it's really exciting. I think there are new ways of being able to get to businesses and offer them, cash flow money. I fear that there's a lot of knee-jerk reactions because of the size of the macro events that happened these days are enormous.
Yeah.
You've got Trump making snap decisions on tariffs that mean that, all of a sudden you could have your wave flyers and your uncapped, your out funds have tariffs on their businesses that are selling to the US and they have no money. And suddenly, how are you going to get that money back?
Yeah.
That didn't used to happen, where all of a sudden your book could implode just because of a macro event. That can now happen. So I think what it means now is we've got to look slightly more holistic and at the bigger picture of what might happen in a year's time. And every single time you have something happen, like how big is the ripple effect and the butterfly effect of what might happen to small businesses in that time, but also maintain the mission, which is we want to fund small businesses. We want to prove the banks wrong.
Yeah.
We want to be able to say banks won't fund these businesses because they think they're too risky, but they're not, because look, here's all their data. We base our funding on its merit of the business at the time, and hopefully, we're proved right. And we have a great loss rate, and we have been proved right. But I think the need for funding is going to grow because most small businesses go to the bank, they get refused, and then they stop. We now need to create a better system where we can educate businesses that actually the bank isn't the first place you should go, or the only place you should go. For very, very good businesses who can get tier one bank funding, you're 10 years old, you've got millions of pounds in profit, this is for growth, you can go get a bank loan.
Low percentage.
Very low percentage.
Yeah.
And so how do we help those businesses figure out that actually the first place they should be going is to a broker, to Swoop, to say, what are the options we've got on the table? And then to find Playter, because that's where the majority of funding, I think now the majority of funding in the UK is done through alternative lenders, not the banks. We increase the size of that more and more and more and take more of the pie. It's not saying that we're just funding more people now. It's other SMEs that weren't getting funding before now are. And that's where you can start to build growth back into the economy and productivity. That will have a knock-on effect. So I think the times at the moment are very volatile. We're always skeptical as what's going to happen next month, and who's going to come out of the woodwork next month and what decisions they're going to make. But generally speaking, it's a really exciting industry, and it's really fulfilling to be able to know you're funding small businesses and it works out. And that's the best part.
Massively. Was there any moment where you were like, wow, we just saved that business?
Yeah, actually. There's been a few where someone is looking for snap funding, saved and helped. So I think when it comes to saving businesses, we're not into rescue loans where they're about to go under because we don't know what's going to happen. But there have been times where it has led to not saving them, but they might have been on the precipice. We've allowed them to get back into growth. We've had some really cool ones where we've done it within 5 hours, got the funds out, they've been able to purchase the goods, allow them to go off and do something. So that type of thing where it's like high paced, comes in, the broker's like, we need this now. And you go, everyone always needs this now. What's going on?
Urgent broker shop.
Yeah. But they're doing it for the right reasons. And so there have been, probably 20, 30 times where it's been really quick, hugely impactful, and they're still with us. And so that you just create that relationship where it's like, we were the only ones to take not the gamble, but had faith in those businesses, and it's kind of been repaid.
Awesome. What's one mistake you see growing businesses make over and over again?
I think they scale too quickly operationally. Two things. Either you just think, right, we're going to blow up, let's hire lots of people, and you haven't figured out your product market fit, you haven't figured out your sales cycles or your operational processes, whatever it is, or you get too rigid in those processes too early. So you want to build robust processes in place and all of a sudden you can't move as quickly as you did before. That's this a startup superpower is how quickly you can move.
Yeah.
And that's effectively it. That's why you disrupt
Yeah.
people. So lots of time I figure out, they're just trying to effectively over-engineer everything.
Yeah.
And I think we're probably really, really early stage. And I've spoken to friends and mates and other people about this when they've come to me, is they sit there for months just trying to work out their logo and branding. And it's like, grow up, just get on with it, get into the market. No one cares what the name of your business is. No one cares what the color of your logo is. No one cares what the logo is. They just care what value you're offering them. And it's if you cut, that's where I see people. It's like, don't become a founder.
But like sometimes, like I get the heebie-jeebies when you're in that early stage, and like if someone's dragging you in to be like, oh, what do we stand for? These things,
mission
like,
statements.
oh my god, just like
I don't think so. I and anyone listening to this podcast, please let me know. I don't think there's a single person who has spoken to an early stage startup who's gone, I'll buy this product because I like their mission statement.
Yeah.
Like the values, the core values they've got as a business. It's like, does this offer me, if I'm looking for data, it's terrible data, the emails are wrong, I'm going to get done for GDPR, but I really like their mission statement. It's the value you bring. So it's like, get over that. And those are the mistakes that are done before the business even gets off the ground. So I think one before, one after.
Yeah. Great answer. If you started Playter today, would you do anything differently?
Yeah. Yeah. Well, I know more now. I think that's the beauty of, that's why people love second-time founders, because you've effectively,
you've seen it.
Especially VCs.
Yeah.
Somebody else has paid for all the mistakes you've
I completely get it.
And I get it.
Yeah.
Now looking back at me in 2021, 2022, even 2023, all the mistakes that I made, I would not make them again. Now, some of them I probably would make again, because they're bets you take, and you don't know whether they're going to come off, but they're bets you take at the point in time when you think they're right to take them. But in terms of people, in terms of build, in terms of focus, in terms of what's right, distribution over product type of things, all of that, I would do it very differently. I would, first principles as I went in. Who cares about, I actually never really cared about the name, or people tried to sue me left, right, and center over 3 or 4 names beforehand that just so happened to be taken. So Playter is a made up name. Who cares? Now people know about it. Now it's a brand. But I would absolutely do 70% different, 30% the same. And that 30% really is intuition and bets, I think.
What is Playter?
What is Playter? Okay. Playter is technology-enabled cash flow financer. We help businesses with revolving, non-revolving credit lines to help pay their bills. So if you need to pay a bill, we help you spread that over, up to 12 months. And we offer cash flow loans up to 500,000, up to 24 months. So we're effectively financing 99% of the market, which are small businesses.
Nice. Yeah, and I can't think of probably a better way to end it there, because you're absolutely proving that. There's thousands of businesses that have now come through Playter and been funded successfully and are getting funded again. And it's showing to banks that absolutely there's a pathway. But I suppose the crux of it is businesses just being able to be aware that it's not just banks that can do this funding. But congratulations to you and your team and what you've achieved with Playter. So it's very, very cool. And thanks so much for being transparent and open and sharing your story with us here today. So thanks a million, Jamie.
It's my pleasure. Thanks for having me.
Super. Thanks so much.